Good morning, YouTube. It's your boy, Post CPI, just showing you how important it is to actually look at the fundamentals and understand them before actually taking any trades. So as you know, that CPI just happened and my A+ CPI setup has occurred. If you don't know what my A+ setup is, here's some other videos for post CPI and NFP stuff. This is a technical setup that I backtested a lot that works perfectly, but now why am I not taking this setup specifically? Doesn't the Fundys show that the US score is higher than AUDUSD? Well, yes, it does show that for now, but this is going to take about an hour to update after the CPI news numbers came out. So why am I not taking this trade? CPI came in a little bit worse than expected for the US dollar. This is a little bit more of a risk on move, which is what the stock market and everything would love. So a risk on move means that USD is going to be a little bit weaker. You're going to see price go up. Alternatively, you're going to see a sell-off in USD currency, so USD is going to be a little bit weaker. Once again, this all depends on what happens with the US-Iran war, because that seems like it's an ongoing issue. If teaser news comes out that that war is over, risk on is going to rally even more. But right now, we're seeing a little bit of a risk on day. The market seems like it's going to be celebrating this news. So if I wasn't aware of any of this stuff, I would be in this trade. Like I said, in previous videos, I've been avoiding USD pairs for the last couple of weeks or months because of the volatility whenever that orange man speaks, or if one of Iran's ministers says something. If they say, hey, no, he lied, the US is lying, Iran's lying, you can never believe either side. I guess this video is just me showing the importance of understanding the fundamentals and with your direction that you're going for. If we zoom out, does AUDUSD have ways to go? Well, it is just breaking out of this little range that it's been in. We've been in quite a little bit of ranges in AUDUSD and Euro, even worse. This one has been a disgusting range.
What's that?
It's almost been untradeable, and then at these moments where you're not trading too much, I've been mainly focusing on NASDAQ and JPY because they've been a little bit cleaner during this time of US dollar uncertainty. You don't have to take a trade every day or even every week. Your goal as a trader is to preserve as much capital as possible so that you're setting yourself up for success later on. Because hey, what if you got impatient and you started just taking trades just because you feel like you're not being productive or anything like that? You have to stop this notion of not being productive when you're not taking trades, because when you start forcing trades in the sakes of being active, that's when you start playing catch up, and catch up is not a good game to play in trading. You'd rather be 0% for a month than playing catch up because you're 4% down. Because imagine next month comes in, August comes in, and you have a killer month, a 5% month, for example. In reality, you're only up 1% because you blew 4% in a month because you weren't patient, you weren't using your technicals properly, you weren't looking at the fundamentals. A lot of people avoid the fundamentals, they just want to see the technicals, they don't understand it, which is why we built ForexFundys. ForexFundys is built for the fundamentals. If you would like to have access to ForexFundys, ForexFundys is a course in which you have me making videos filled with some memes and stuff, just to make Forex a little bit less boring, because I'm an econ grad. These are the topics that I teach on the news side of things. A lot of these videos are available on YouTube as well. Not all of them, but a lot. And then we have the stuff that's not on the charts as well, which would be Module 2, which would be geopolitics, safe havens, tariffs, the orange man, and all that stuff. The most important part about ForexFundys is our calendar, in which we have all 8 currencies, so USD, Euro, GBP, JPY, AUD, NZD, CAD, and CHF, and we rank them all over here off of how they're performing against their news events, with quizzes at the end of each module so that you can test your knowledge to actually make sure that you're actually learning stuff. We have resources, we have everything, and it's all available for $29.99 per month or $299.99 for a lifetime membership, so you can have all access to all this stuff forever, and it's also on your trading view. That's one thing that we wanted to work on. We also have access to the COT. This stuff updates all the time, and this is a ForexFundys exclusive, in which we have the ForexFundys quadrant, which shows how prices behaving against the open interest. We have videos on here explaining what that is and putting everything together. with the COT. Well, this also shows the importance of divergence. So for example, AUD, if you've watched my previous videos before, you see that I order these depending on how strong the currency is on the day. So AUDUSD just happens to also be the strongest currency today and the stronger one off of the Fundys. This doesn't happen every single day though. So for example, GBP USD is one of the weaker ones off the Fundys and is showing, don't let this be a confirmation bias or anything like that off of ForexFundys. This just happens to be that GBP reacted a little bit weaker today. But AUD USD, if I was in this, look at how deep in drawdown I would be in. I would have probably been taken out honestly by spread already, but we're just going to play this out, let this play out, and see what would have happened if I actually took this trade. See, like I posted in recent videos, that ForexFundys is not only for actually helping you find a bias and find a directional bias to align with your technical side of trading. It could also be used as a filter to say, hey, this technical setup looks brilliant. What are the fundamentals saying? This trade, to be honest, was perfect on the technical side of things. This was one of my plays called the CPI reversal play, where CPI actually launches up, has a little break of structure on the M3, and price is kind of like messing around within it. This is a perfect A+ setup, especially because we already swept the previous daily high, the previous weekly high as well. This was a perfect technical setup. However, fundamental side of things, I just felt like we were going to be having a risk on day. Inflation was poor for the US dollar. Poor in the sense that it might mean that we're not going to get a rate hike this month, which was one of the things that they were talking about. And one of the important things that has nothing to do with fundamentals is understanding your journal and how long your trades take. So when you think about it, CPI starts at 8:30. By the time you get your breaks and structure and stuff, it is going to be about maybe 9 o'clock, 9:15-ish. And at 10 o'clock, we have the new, not Powell, Kevin Warsh speaking. You don't want to be in the market at this time. So from 8 o'clock to 10 o'clock, do you want to be in a trade? I wouldn't want to be in one. Even if the fundamentals said, hey, this is going to be a strong US dollar trade, and it did the exact same setup, I wouldn't have been in it because I know that my trades usually last between 20 minutes and 2 hours. I wasn't going to take the gamble though that this trade would have messed around and I would have been in the trade while we're just speaking. So it's days like these where you can really avoid losses using the fundamental side of things and just knowing the time that your trades usually play out. I hope everyone has had a lovely trading day, trading week, and that you learned something from this. It has been your boy. Peace out.